And welcome to the Budget and Finance Committee meeting of Sun City West, Arizona. We currently have, I'm calling the meeting to order. I'm Ann Brown, the treasurer and chair of this committee. And we have established a quorum with 4 of our members in attendance here in the lecture hall and 2 other members available via phone. So we have all members with us. I'd like to go ahead with approving our minutes from our last meeting, which was May 18th, 2020. These have been available for everyone to review. Are there any changes, additions, corrections? If not, I ask for consensus to approve these.
Yes.
Thank you. We'll move forward. Just going to go over a few housekeeping duties. I've given each of you a little handout about microphone usage, so please remember, if you're the talker, make sure your microphone is on. If you're not the talker, please turn it off. And Gary and Anita, if you need to speak up during the meeting, just interject and say, whoops, I got a, hey, Ann, I got a comment or question. So anyway, it's pretty common sense microphone usage. I want to introduce members of my committee that we have. I have 3 returning members. To my left is John Hobold, who was on the committee last year. And John, is this your 3rd year?
Yes.
It's John's 3rd year on Budget and Finance, and last year he was very instrumental in working on the revision of some of our policies, specifically FI 12, I believe it was, in establishing our financial advisor and also in making changes in our allocation of our assets. Another returning member we have is Kathy Lindell. This is her 2nd year. Welcome back, Kathy.
Thank you very much.
And Kathy was instrumental, and for any of you who are going to Kuntz Rec Centers these days, the whole place is not shut down for the remodeling and process that's going on because Kathy brought forth the idea to break this into 2 sections, and we appreciate that, Kathy. Another returning member is Gary Bosack. Gary, welcome back.
Thanks, Ann.
He was on the committee last year. We have a new member, Anita DeGumbia. Anita is with us. You're in Michigan, correct, Anita?
No, I'm in Wisconsin.
Oh, Wisconsin. Oh, sorry.
Let's put it this way, same thing, it's cold.
Okay, well, welcome to our committee. We're glad to have you with us. And, anytime you want to come to Arizona, we're not cold right now. And finally, our newest member is George K. I can't pronounce your last name.
Thank you.
It's thank you? Oh.
I'm very good with that. Thank you.
George is seasoned with budget and finance information, as he is our most recent past president of the governing board of directors. So I have a great committee, might entertain adding someone else to the committee. So if anyone is listening in, is interested, please feel free to fill out a committee application online, and I may want to visit with you. Next, I'd like to ask our CFO, Pete Finelli, to introduce some of our new accounting staff.
I would like to thank the outgoing members of my staff, Tim D'Angelo, who shifted over into golf ops to pursue a little more leisurely pace of life that he's well-deserved, and also Karen Woods, who had some personal things that she needed to take care of and needed to move to another part of the country. So, but we pursued, we had a nice plan. Both of them gave us ample time to do some recruitment, and I couldn't be more pleased with the 2 folks that you're going to be introduced here. So thank you.
Hello, everyone. My name is Clifton Swan. I'm the new accounting manager. I replaced Tim. And a little bit about myself. I'm originally from Hershey, Pennsylvania, and moved out to Arizona via upstate New York, Illinois, Chicago, Illinois area to the Phoenix area in 2007. I live in Peoria, 93rd Ave in Deer Valley. I have a son who's a sophomore and plays baseball at Liberty High School. He's a catcher. And I'm really excited to be here. I really love the team, and it's just been really kind of fun getting engrossed in this process, and I just really look forward to working with everybody. Thank you. And this is Terry. She's awesome.
Thank you. Hi, I'm Terry West. I am originally from the Wichita, Kansas area, and then moved to South Dakota for the last 30 years, and just recently moved to Sun City West a couple weeks ago. So I took the financial accountant position that was Karen's position, and have worked in accounting for those 30 years that I was in South Dakota. So really looking forward to a new adventure and living here and getting away from the South Dakota winters. So, thank you.
Welcome to both of you, and Tim and Karen will be missed. They gave great service to Sun City West, but so far in the short interactions I've had with Cliff and Terry, I think they're going to fit in real well and do a great job for us. I've handed everyone the full committee roster. Anita and Gary, I will have those for you when you are here in person. Next thing we need to do is we need a committee secretary. We've got kind of a format that we follow each meeting with the secretary. Of course, the meetings are available to review for anyone who takes on the secretary position. I would like to see, first of all, if I have any volunteers to be secretary. You can do it for the first half of the year, the second half of the year, the entire year. I'm listening. Well, we can do this. That was going to be the easy way. What I'm going to do now is assign someone, at least for this particular week, to do this. And we may have to just go meeting to meeting, spreading the joy around. But Kathy, I believe you've done this in the past, haven't you?
I just did it the last meeting.
I know you did. And you're also going to be gone most of October, so if you would please do this meeting for me, I would
Sure.
appreciate it. Thank you very much. And the offer's still out there for anyone who would like to be the secretary, even if just for the first few months, and spread the joy around. We've got on.
May I speak?
Yes, you may.
May I suggest that since the job typically detracts from participation in a meeting, and that's, I think, why you don't get any volunteers, perhaps it would make some sense to just rotate it on an alphabetic basis. If you start with L, you just go through the alphabet, and we all take our turn in the barrel, so to speak, and be done with it.
How
I
does
think this
every,
group is too wily for you to get an onslaught of
a wily
volunteers.
group? That's what I've always wanted, is a wily group. You are correct, John, and that it does detract somewhat. That is why it's nice that we do have the recorded minutes to go back over when this happens. So anyway, Kathy, I appreciate you stepping up to the plate, and this will get you out of the rotation then for a few months. The next thing on the agenda is using BoardDocs. Because all of you are familiar with this, I'm going to just go around and ask if anyone really wants a tutorial on that. Kathy, do you need one? No, I'm fine. John?
No.
George? No, thank you. Anita?
No, thank you.
Gary?
Good to go, thanks.
Thank you. Okay. Next, I'm going to ask Karen Repton, our executive assistant, to talk a little bit about committee duties and consensus and recommendation concept. Karen?
Yes, thanks, Ann. So again, I'm the governing board admin, and I just come in here to say a few words about the way committees work versus the board. And one of the major misunderstandings is that committees make recommendations to the board. They don't vote. In fact, they discuss, make recommendations as appropriate, and then their recommendations reach consensus to go to the board. And consensus is defined as 100% agreement. So like I've done with the other committees, and if you've watched any of the tapes, you all will know possibly what happens if a committee does not achieve 100% consensus to make a recommendation to the board. I ask that of you. Anyone know? No? It's very simple. It simply reverts to a roll call, and as long as we have a majority of agreement, then a recommendation can be made. Okay? So I just wanted to review that because there's a lot of confusion out there between committees and why committees don't vote. Only the board votes. Committees reach consensus. Okay, thank you.
Thank you, Karen. Next item is our new business, and I'm going to turn this over to our CFO, Pete Finelli, for the Clifton, Larsen, Allen Auditor presentation.
Thank you very much. In approximately late July, the audit was initiated. It was about 80 or so requested individual items comprising thousands of requested documents, and took about a little under a month to culminate all the responses. And we do really appreciate Clifton Larsen in the sense that they have a really wonderful portal and a website to which they can extract all the information requested just through uploads, and the days, so to speak, of handing them thousands of piles of documents into a small room are over. It frees up a lot of our committee rooms from having to not be used for weeks on end. So they did a very good job. I'll let Jean advise who led it. Every year we do have a different lead auditor, and she also has only been overseeing our lead for several years from the other Vice President of Clifton Larsen, John Fresno. So I'll let her take it from and explain her findings. So.
Good morning. Is this okay? Hi, my name is Jean Dietrich. I've been in public accounting for going on 14, 15 years now. And my specialization is common interest realty associations and homeowners associations, much like the recreation centers of Sun City West. I actually specialize and do about 15 to 16 associations, give or take. The majority of those with 12/31 year ends. One of your sister associations in Sun City West, Sun City Grand, sorry, you are Sun City West, is another association I do as well. This year was a significant year in that the Accounting Standards Board implemented what is called the Revenue Recognition Standard, what we'll refer to as Topic 606. And this implemented your financials significantly. So if you were to compare what's going to be issued this year to the prior year, you're going to see a lot of changes. I'm going to briefly go through those changes with you. If you have any questions, please don't hesitate to speak out. But in essence, what the standard wanted to do was take your cash receipt, your revenue receipts coming in the door, and match them to your expenses, your needs going out the door, okay? This resulted in a change of your accounting for your reserves. Your operating financials, your membership dues, the recognition for those revenues didn't change because those are used for the daily operations, the maintaining of the common areas throughout the year. So you still recognize your membership over the year. What did change was how your reserves are recorded. So you make an allocation from your membership dues to your reserves. But the expenses, those disbursements going out the door, don't all necessarily occur in 1 year, okay? So what the standard said was, what are your performance obligations? And for the reserves, those are your major repairs and replacements and your capital expenditures that occur. So at this point, you don't recognize that revenue till those expenditures occur. And that's what's created a change in your financial statements. The operations and the day-to-day recording of cash receipts and disbursements is not going to change. This is just going to be a change that occurs on an annual basis, okay? One aspect of your reserves is that asset preservation fee, that fee that is charged when there's a transfer of ownership. In your CC&Rs, that fee is to be used for major repairs and replacements and capital expenditures. So you did have significant sales during the year of about $5 million. But because you had your allocation from operations and not all of the expenditures occurred during the year, you have what's an encumbrance that will be spent in the next year, those fees aren't fully recognized, okay? They will be recognized when those expenditures occur. So that's going to look a little different to you. But if we could, Pete, if we could advance to the financials. So the report that I want to start with is the Recreation Centers of Sun City West, Inc., financial statements and supplementary information for the year ended June 30, 2021. There we go, that's the audit report. So the first change you're going to see for the current year is that you do not have a comparative financial statement this year. With the implementation and the change in presentation of the reserves, there was a restatement. And when you have a restatement, it really is difficult to compare apples to apples. So for this year only, you'll have a single year presentation. Next year, now that the standard's implemented, you'll go back to a comparative financial statement. So the good news is that we are issuing a clean, unmodified opinion on these financial statements. There is an other matter, an emphasis paragraph, in regards to the restatement, but this did not impact our opinion. Still a clean opinion issued. Previously, this is your balance sheet. Previously, this was a single column and would compare a single column to a single column. Now we're presenting it as fund financial statements where you have your operating fund and your reserve fund. And this makes it really a lot clearer what transactions are occurring in reserves and what transactions are occurring in operations. And you'll see that your liabilities now have something called a replacement fund reserve. That $30 million is a reclassification from equity into what's called a deferred revenue line. So you still have all your funds, you still have them set aside for reserve costs, but it's just listed above the line as a liability versus an equity item. And you still have all those assets on the balance sheet for your investments in the reserve. If you go to the next page, you'll see that your income statement has also changed to a columnar format, in that you have your operating fund and your reserve funds. And this is where you can see the revenue recognized for the year. And like I said, you still had significant asset preservation fees collected, but due to the spending and timing of spending, you only recognize a portion of that. But all those asset preservation fees that were collected are now in that reserve fund liability. And if you go to the next page, the statement of cash flows, you'll see those cash receipts coming in the door, in that for the year ended June 30, 2021, you had positive cash flows of $8.7 million from operations, which is just excellent for the year. Especially in a pandemic, I just applaud how well the association did for the year. You'll also see that you had purchases of about $6.8 million of land, buildings, and equipment. and you had the repayment of debt associated with the PPP loan, ending with positive cash of about $12 million. So the next part of your financial statements are the notes to these financial statements. They continue
Excuse me.
on with no, yes, go ahead.
I just have a question, back on the page before there, where you have cash and cash equivalents end of the year, about the 12 million. Is that all unencumbered? That's $12 million of cash sitting there unspent, is that correct?
That is correct.
And
That's in your operating fund.
at the end of the year, and none of that's encumbered?
She will explain this, but it's coming up, there is a fund transfer that occurs annually. There will be about $2 million of this rolling to the reserve funds.
So if you look at the,
but-
go back to the balance sheet, there is $2 million that is due to the reserves.
Two mi- yeah,
1.988 interfund dues and receivables, the fifth line down.
Yeah, so my real question is, well, it is the question.
There's $10 million in cash. in
And
the
does that go
operating-
back into the reserves?
No.
No.
This is the operating cash. We have to weather peak portions of the years. Let me step way back. All capital, all payroll, all operating expenses are paid out of the operating fund. We don't ever make a payment every time we make an item purchased from, on our capital. We just do once a year where the components of that $1,988,000 are all evaluated for who owes what. In other words, every payment goes out to the operating. That can be for a $2 million Kuntz project, or it could be for a $5 petty cash. At the end of the year, as she points out, there was about $6.9 million in capital spend, all of our operating, all of our APFs, all of those inflows are evaluated against that, and then we do a true-up, if you will, who owes which. The reserve funds owe the operating, and the operating owes, and when we have sizable years where the positive income statement and the APFs and all of those were favorable against the capital spend, then the reserve fund will get the money from the operating when we do the true-up.
Okay, thank you.
Sorry, moving on. With the notes of the financial statements, there have just been a few changes that I'll go over. Starting on page 8, where you have your identification of your deferred income, your membership dues, and your reserve fund assessment allocation, golf fees, asset preservation fee. So if you were to compare this note to the prior year, what you would see is that it was a lot more condensed in the prior year. What the revenue recognition standard required was that you disclose how you determined your price, what your performance obligations were, was the revenue recognized over a period of time or at a point in time. So there's been some expansion on those disclosures as required. And then on page 9, we just disclosed that topic 606 was implemented. So the difference with 606 is that you had a change in revenue recognition associated with your reserve fees and with your asset preservation fees. Other than that, there were no other changes in accounting policies for the year. To thoroughly see the change in accounting policy, I'd like to highlight Note 7. So if you go to Note 7 on page 13 of your financials, this is where you're going to be able to see that reclassification of equity to deferred revenue and that restatement of equity. So it was just simply nothing impacted your operating fund, but that board designated member equity was transferred to a liability to be there and will be recognized as revenue when those expenditures occur, when those capital purchases occur, major repairs and replacements. The table below the restatement shows the impact of 606, how revenue was reported prior to 606, and then the impact, and then how, as it was reported with the implementation of 606. So the majority of your revenue lines were not impacted. The significant impact came to that asset preservation fee. But those fees are still there to be used by the association. It's just a timing of recognition per gap.
Gary and Anita, are you understanding through this?
Yes.
Yes.
Just making sure.
And if you scroll down to the next page, Pete, at the top of page 14, you're going to see the roll forward of your contract, what's called contract liabilities. Your prepaid assessments, collections, and payments from your prepaid assessments, and then that reserve fund liability. Collection of the asset preservation fee of $5 million in there, your allocation of assessments, and then the amount of asset fee that recognized it and reduced that deferred revenue liability. So next year, if you have less asset preservation fees collected, but more expenditures, you're going to have more revenue recognized than you collect. Okay, so that number is going to fluctuate, and it's going to be based on when you spend the money, when you make those purchases. The rest of the financials, just brief, there's a new accounting standard that will be coming up with the implementation of leases. We started that discussion with management. They haven't determined the impact of the lease standard at this time, but based on preliminary views, not thinking it's going to be a huge impact to the association. Other associations, it will be. Those that lease a lot of their golf carts, do a lot of service concession arrangements, those kinds of things. But at this time, no definitive answer is made, but we're thinking not too big an impact, not like 606 was to your financial statements. And just to highlight, you do have $30 million for your reserve account balance. I believe you aim 40%, right? And you're right there. So far, looking pretty good, really healthy for the association. And like I said, I do about 16 of these. And it's really important how important it is to the committee and to the board to fund those reserves. Not robbing from Peter to pay Paul. So really a healthy look for you. Just wanted to go over my required communications. We did perform an audit of the recreation centers of Sun City West for the year ended June 30, 2021. We did not encounter any difficulties with management. They were timely with presentation. A good amount of the audit was coming to an understanding of how 606 was impacting your revenue recognition. So that standard was adopted during the year, and that was the only change in accounting policy. Management makes certain estimates, such as an estimate for allowance for doubtful accounts, as well as an estimate of deferred income. We review these estimates and how they're determined and see that they're consistent year over year. We evaluated those estimates, and I'm pleased to let you know we did not identify any management bias in coming to those estimates. We did not identify any financial disclosures that we would deem sensitive. These would be disclosures such as the going concern, but with $30 million in reserves, a really healthy balance sheet of $10 million in cash, very healthy for the association, so there were no such disclosures. All the financial statement disclosures are considered neutral, consistent, and clear. There were no identified corrected misstatements or uncorrected misstatements as a part of our audit. We did not identify any irregular or fraudulent transactions. We had no disagreements with management with the implementation of the accounting standard and the presentation of your financial statements. We're not aware of management consulting with other independent accountants, what we would deem opinion shopping. We're not aware of any such consultations. And as I said, we discussed with management throughout the year upcoming standards and new standards that will be in the future any unique transactions that occur. None of those discussions with management were a condition as your external auditors for this engagement. Overall, a clean audit. With the size of your accounting department, there's always improvements that can be had with segregation of duties. Management continues to improve in this area, and now with the addition to the accounting department, we think that that will continue on. Are there any questions? I know there are a lot of changes to the financial statements. I'll entertain any questions of anyone at this time.
I do have a question.
Yes.
You skipped over management representations, and you refer to the attachment on the representation letter dated report date. Did we see that? We must have somewhere, or not.
The representation letter are the representations management will make to us. They will be attached to the issued governance
So we haven't seen that
communication.
yet.
That is signed by management.
I know, but you indicated it would be included.
And it will
it's
be
not.
included in the final letter.
Okay,
But I can get that to the finance committee to look
That'd be-
at.
sure.
Absolutely.
I think that would be good for us to see. When do you expect that to be issued?
Today.
Okay.
It's, what it is it's about 30 points that management represents, that they were fully transparent in the information they gave to us, that there were no subsequent events disclosed, that there were no uncorrected misstatements, that there was no fraud, no illegal actions, et cetera, et cetera, et cetera. It's a kind of a catch-all that management, because management is responsible for these financial statements, and that's them taking responsibility for them.
Okay, thank you.
And I will get that to you today. I'll send it to the committee.
Thank you.
Any other questions?
Yeah, Madam Chair, maybe Pete could comment on the segregation of duties and what's been happening there and what the changes may be.
Well, I'd like for Pete to address that
Right.
since that's operations. Thank you.
Right.
Yeah.
As Jean referenced, we have a total of 6.5 FTEs in our accounting department. The two folks that introduced themselves earlier are directors, if you will. They're the two of three exempt employees. One's the accounting manager, one's our accountant, and then we have a financial analyst. Those are our exempt employees. Then we have a payroll person. We have a materials receiving employee, and then we have an accounts payable person. Those are our 6 full-time people. Then we have one half-time person who does reconciliation of daily cash and some of the golf tournament allocations and things like that. The caveat that they bring in every year is that you have such a limited amount of staff that there's going to be times when the person preparing might be the very same person posting, for example, on journal entries, but that's not without review. Obviously, I do nothing at all in the preparation of any of the financials, none whatsoever, and so I always will be the safeguard, if you will, for any kind of odd entries or things like that. But it's just there are occasions when we have those kind of occurrences. What she's mentioning about improvements is that I'm not used to that, which is to say, I came from a for-profit environment where Sarbanes-Oxley's requirements at a corporate level were expected, and you never had any kind of non-segregation of duties. The point that they make is, generally speaking, there are enough catch-alls, including all remittances that go out the door are attested to by the CFO and the general manager. So the material outflows are always going to be governed on that. And the rest are somewhat deemed immaterial to the impact of a $25 million annual operation. So.
Thanks.
Any other questions for either Jean or for Pete?
Yes, Madam Chair, I have a question. To just ask you to summarize the impact of 606 on our statements. I did not thread through every line item in the report, so I'm going to just ask you, did any numbers change, or did you just reposition the numbers on the balance sheet?
On the balance sheet, repositioned. On the income statement, when you look at the revenue recognized, it's $3.5 million less than if 606 were not implemented.
Thank you. That very concise, appreciated answer. Thank you.
Madam Chair, this is Anita. My question is this going to be on the governing board docket for the upcoming meeting? Because I am concerned that when people start seeing these large shifts in numbers, it could cause some concern. And if we can get out in front of this and have a solid explanation by President Fitzsimons on this issue, I think that's going to make it a lot more understandable for the community.
Pete's going to
I'll
address
attempt
that.
to assuage you a little bit. Jean pointed out the key items that you'll be hearing a little bit later in my presentation on capital and reserve funds. I mentioned this earlier, but a key indicator of what she calls the strength of the reserve funds against the fully funded balance, and I'll explain those terms a little bit more, but most of you are returnees and you've heard these before, is the percentage of those reserve funds against the fully funded balance. And as she mentioned, there is a floor of 40% within our policies, but generally accepted industry standard says that 70% above is considered gold. Anywhere from 30 to 70% is considered acceptable and very low risk. We're in the 58% range when you just take the $30.7 million that will be there once we do the $1.9 million transfer. So all we're doing, so to speak, is you didn't change any of that fund balance, not one nickel. We didn't change any of the fully funded balance, not one nickel. All we did was basically say that those APF fees of $5.1 million are placed into a liability for future funded balances because your policies state that reserve funds, APF fees, are designated for future capital. Once you put that in your policy, you have to follow it from an accounting standpoint. And so all they're doing is saying, instead of 5.1 million on the income statement, lower it to 1.5. We're a non-tax entity. There's no change in what we owe or what we don't owe. But notice we didn't change the fund balance there, one nickel. And what used to be in members' equity of many tens of millions built up over the years, we just took a portion of that and applied it into deferred revenue. And that's pretty simple and has no real impact on the key indicator, in my opinion, which is our reserve funds and the percentage of funded balance. So.
I think the point is well taken, though, that we should probably give quick overview of this at the governing board meeting when you do present these.
Shall do.
Thank you. Any other questions or comments from my committee? Any questions or comments? I've got 3 governing board members here. Sue Fitzsimons, our president. Donna Maloney, our vice president. And Lisa Vines, our secretary. Okay, do I have any comments from our audience? Okay, thank you so much, Jean.
Thank you.
Appreciate what you've done for us. Nice presentation.
Thank you very much, and have a wonderful afternoon.
Thank you so much. I will comment, last year, when we heard the presentation from Clifton Larsen. We did discuss their tenure with us. We approved a 3-year contract. We are entering year 2 of a 3-year contract with them. What I would like now is to get consensus to accept this audit and move it forward to the board. I'm seeing George's head shaking. You may not be able to hear it.
Yes.
Anita, Gary?
Yes.
Yes.
Okay, thank you. We have consensus to move this to the Board of Directors. Next, Pete Finelli, our CFO, is going to preview our May, June, and July 2021 financials.
Thank you, Ann. As you all know, your committee last met in late May, and so generally speaking, a lot of you are returnees, but generally speaking, we will present the financials at the second BNF of any given month. Obviously, May, and then the year-end June, and then we do have 1 month that we are planning to present to you today. But again, generally speaking, it will be just one item. So with that in mind, I'm going to go rather quickly through the actual months that were part of the year-end. You all just heard and saw the financials, so I won't elaborate a lot on it.
Carol, please be quiet. Everybody can hear that.
Very good. Real briefly, since there are a few members, I'm going to very briefly explain what you have as part of your income statement. First of all, in the revenue side, the membership, 95% of that or more is in our annual dues, but also included in that are guest fees, tenant fees, transfer fees, things like that. Recreation is mostly hall rentals, tours, revenues, and what used to have some Explorer revenues went in there. Golf fees is entirely the greens fees and discount card reimbursements. Sports pavilion is bowling and separated by open or leagues or tournaments. Special events is 99% of them are concerts or Casey's events. This is the net of what the association recognizes for income on ticket sales minus the event cost. The ancillary is 90% of that is golf cart rentals, range balls, and our cell tower revenues. Also golf lessons are in there and things like that. The merchandise, food and beverage, 95% of that comes from our golf pro shops. These also are net of our cost of the goods sold. Moving on to the expenses, wages and benefits, it represents about 60% of our overall operating costs. Of course, in there is any kind of payroll, health insurance, SUI, FUI, the unemployment, and of course FICA and things like that. Utilities and repair and maintenance are pretty straightforward. One that is asked a lot is landscape maintenance. This is predominantly chemicals, fertilizers, aerification expenses, tree trimmings, all of which can be pretty pricey for such a large number of courses and landscape areas of the association. Supplies are pretty straightforward. Equipment, just a brief explanation, that's for larger dollar items that don't meet our capitalization policy. Our capitalization policy calls for anything $5,000 or a 5-year expected life. Mostly in that area is computer equipment, recreation equipment such as poolside equipment and fitness equipment and stuff like that. Taxes and insurance, mostly on the insurance side in particular is our property casualty and D&O insurance. On the taxes, mostly sales taxes and property taxes. On the interest and financial, mostly it's our credit card fees for those type of transactions. Other operating is the largest amount there is our service contracts, such as TEG, which is our computer program, Paycom, which is our payroll program, et cetera, things like that. Legal and professional, the legal is pretty obvious, but also professional services for outside advisement, and in particular, one of the larger dollars historically has been master planning and things like that. Employee-related can be uniforms, training expenses, things like that. Moving briefly down into the capital-related, investment income on the reserve funds, pretty obvious, but it's our dividends, interest on our bonds, stocks, CD. The investment fee is when recorded when we do sell off some of those reserve funds to pay the investment advisor expenses. Investment realized and unrealized. The only time we really ever record on the realized is when we have some of the reserve fund shares are executed or sold, and a loss or gain is recorded that time. We don't do a lot of that, so it's usually a pretty small amount. The unrealized, of course, is just the valuation change from the valuation at the end of the previous month to the valuation at the end of the current month. Club funded is not going to be used much anymore, as you all are aware of the 501c7 changes. But that historically has been where the clubs made contributions towards the capital spend. Asset preservation fees, 98% of them are home sales, but also reimbursements come from our deeds or ownership changes, inheritances, if you will. Gain on the loss on the asset disposals. This is net book value of any asset when it is retired or sold. It's recorded a gain or loss on that. There are thousands of fixed asset items, and most of them all have useful lives that extend well beyond what we have in our GAAP requirements, generally accepted accounting principles. Those lifings are usually in the 5 to 10 range, and most of our assets we use well beyond that. So that's why we don't see a lot of activity on this, and it's a good thing for association funds. Depreciation expense, pretty obvious, but those same thousands of fixed assets are depreciated monthly. We have about 128 million in assets and about 80 million or so already accumulated depreciation. And we have a run rate of about 4 million in annual depreciation. So any questions on explanations that I could provide? Otherwise, I'll proceed with the financials for the May and June and July. In the revenue side, for May, real briefly, solid golf revenues as we saw throughout the year. Same and down in ancillary where golf range balls and golf carts just did very well the whole year, with our golf rounds being up almost 17% year over year. So overall revenues, 105 favorable. Expense management, nothing really material on the variance side, so 40,000 favorable, so operating margin 145K. A little bit more valuation benefit in the bonds with the treasury notes continuing to come down, and so our capital related had a positive variance as well. So a good solid month for May. Katie, if you could go to, any questions on May? Okay. June, wanted to focus more on the year to date, but real briefly on the month, you can see the same denominators, 90,000 favorable on the revenue side. Some pretty considerable R&M and landscape maintenance, and I do want to point that out, that those can be highly volatile. Sometimes it's even hard to control. I mean, it's the one item that you cross your fingers a little bit. The rest of, almost all the rest of them, you have a pretty good idea of how to manage it, but those things happen. And but generally speaking, I think at the end of the year there was a considerable amount of activity done on the courses and things like that to finish out the year. So we did have a small deficit on the operating expenses, but still an overall favorable margin on the operating. You can see on the capital related, the nobody should take any shock. You know, we still had the APFs that we collected. It just was recorded to the negative 3.5 million on the deferred that Jean just referenced. And I'll be talking a little bit more on the reserve funds where they stand, but out to the right at the end of the year, the operating margin, that's in the actual column in the middle where it says operating cash inflow, that 2.7 million was our operating margin against a budget of $1.6 million. And we did most of that despite a deficit of operating revenues, but expense management and some organic things that happened due to rec center closures and other savings that we executed that we were more than able to offset that $600,000 to produce about $1 million favorable operating margin. On the capital-related investment fees held up well. We did have continuing gains in the realized and unrealized valuation of the reserve funds. APFs were extremely solid. That number was the 5.1 million before the FASB 606 entry. So almost a $500,000 favorable variance there. Solid contribution with the home sales and deed transfers being in the 1,350 range. So we budget for our future at 1,200 run rate. So really good performance there. So overall at the bottom, about 2.5. That would have been about 5.1 with 5.0 with the $3.5 million entry. So very solid year. Any questions on the year end? So.
Yeah, Pete, just order of magnitude, in May, and then I see in June, it's probably the same in July, that overtime was unfavorable. Can you give me an order of magnitude? Are we talking hundreds of thousands of dollars, or are we talking something smaller?
Overtime, is that what you said?
Yeah.
Yeah, no, it's a very, very minor number. Don't hold me to this, but I believe 10,000, maybe 12,000 in any given payroll would be the high end.
Great,
And
thank
that's
you.
out of 500,000.
Yeah,
so.
that's reasonable for sure.
Question? Pete, the revenues over expenses were 2.5 million, and the transfer is going to be 2 million. Can you, in a few words, explain the difference?
Yeah, okay. So thank you. It is one component of about 5 key items, John, that represent the transfer. The first item is what you referenced by your own RCSCW policies, all the operating excess. All that is designated to go to the reserve fund. So plunk that into the plus column, if you will, of the transfer. The second component is, a material component is the capital spend. Those 6.8 million or so outflows. The other material inflows are the APF fees, and some organically happen, which is to say the interest and dividends on the reserve funds are automatically plunked there. The valuation changes automatically happen. But one last one that confuses a little bit people, but encumbrance. And to make it's not a difficult concept. It basically says that we don't have to have everything in the door by June 30th, our fiscal year end close. The governing board grants the association accounting or the staff general manager to acquire those governing board capital items whenever the right time exists. And so at the end of the year, we take those capital items, calculate how much needs to be put out into the calculation and to make sure that we encumber that liability. Those 4 components, John, are all evaluated in a spin. And then we, like I was telling Kathy earlier, then we evaluate who owes what. And big inflows of the operating by policy. APFs were solid. Capital spend was high, but against the inflows, we had about a $2 million payment that will be emerging from the operating over to the reserve funds. So it's a component, and it's important, but it's not the only item that contributes to the the R&R, and I'll explain that a little bit more when I get to my next slides.
Thank you.
Any other questions before Pete goes on?
And you want digital questions?
Yes, if they pertain to what we're talking about right now. Katie, thank you.
Bernie Reed would like to know why the summary is 3.5 months old.
Well, I
What
think I
is
mentioned.
3.5 months old?
The summary report?
Yeah, well, the committee by policy has to meet through our budget and finance. So, Bernie, there was no meetings in June, July, or August. And so here we are catching them up. So July, moving forward, I can go to the bottom left-hand corner. We're off to a good start. Up in the upper left-hand corner, revenues, same kind of criteria that occurred last year are happening this year. Solid golf revenues, ancillary revenues from the. And then one item that I would like to just highlight is on the food and beverage. Lizard Acres has been a resounding success. They're generating probably approximately $12,000 of sales. There is a cost of goods there. It's not all just a profit-making thing, but it just, the revenue is recorded up there, and it's doing very well. On the expense side, I think Todd is holding up very well, but in the wages and benefits, we have quite a few openings in the golf maintenance. It contributed a little bit, Kathy, to some of the overtime you're referencing, but not a considerable amount. But utilities is a bigger variance than we normally see, and upon evaluation, may not seem like it, but we actually had about a 10-degree positive variance in July than we did against some of the norms. And also it rained, and so when you don't have to turn on the pumps, you can see your utility bills come down quite a bit. I don't want to take too much happiness, so to speak, in the landscape maintenance because that's highly volatile. When you get your chemicals in this era right now of short supply, sometimes it's driven by the availability of the items and just our desire to use them. So favorable to start with, but I don't put that into the bank yet. So overall expenses with those impacts were a little over 200,000 favorable. So the operating margin is off to a nice start for July, about 273 against the budget. Down in the capital-related investment income was pretty much right as expected. The bond portfolio, that's 90% of our Vanguard funds, was improved because of the continuing value, improvement of the T-bills have come down from 1.4 to about 1.28, so our bond portfolio benefited from that. And of course, the APFs, I don't count on anything, so those that know the budget intimately, it's a 1,200 annual sales is our goal. That's 100 a month, obviously, and we were about 110, so off to a favorable start in that as well.
Thank you, Pete. I might mention for those of you who are not aware, I believe it was in late July or early August, the board had a special meeting because we had a large unexpected expense in the purchase of grass seed for our golf courses. And that, was that 471,000?
That was the budget amount. You're 100% right, and I'm glad you mentioned that because we want to make sure that we recognize some of the headwinds that are going to be facing throughout the year. The most notable one that's already going to occur, and was that the 680,000 was the requested amount for the seed. Our budget of roughly 460 gave us the need to ask the board for that 200. Don't hold me the amount. I think it was 220,000 spend, and that will be recorded most likely in September. So.
Okay, thank you. And I will have to give a shout out to our operations manager because they were able to get the seed nailed down at a very good price, and apparently we may have some of the best looking golf courses in the West Valley, as we normally do anyway, but this winter may be especially true because of the fact that we jumped on this. Now, it was a big expense, but we owe it to our community and our owner members to keep everything in tip-top shape. So that was something that the board had to address in an emergency meeting. And we will
Very true,
start
Ann.
seeing
Thank
that will be reflected in upcoming financials.
That was my, on the financials. I'll proceed to the capital and reserve fund if there aren't any questions.
I just want to
Yeah.
ask if anyone else on the committee has any questions on the July financial? Anyone in our audience? Oh, John, go
I
ahead.
have one question. It's somewhat tangential to the financials themselves, but Lizard Acres is off to a good start, per your comment, and I believe that would probably be recorded under Sports Pavilion.
It is.
Is it reported as a net, much like ancillary, or?
You know, you'd like to believe that, and I'm going to say yes, but don't absolutely hold me to that. I believe it does, yeah. Cost of goods sold is usually right in the food and beverage.
Okay, and then a follow-up question, and I'm not sure, Pete, that this is actually directed to you. I'm not sure where to direct it. But is the goal of operating Lizard Acres to generate a profit, or is it intended to be for the community as a resource and a net?
The latter.
Nonprofit
The
basis?
latter.
Which is it?
Yeah. Very much so the latter. Yeah, no, the clamoring, and from this chair, many of you are board members in the audience and here, you all know that there was as much as $225,000 earmarked for that space to create a social gathering spot, and to have done it in great idea sets, and the people in the staff who did the painting and acquired a small amount of equipment to make that the way it is, and the response it's gotten, I think, is a win for everybody.
So the net I'm understanding is that it's being operated on a net basis as opposed to a profit center.
Oh, yeah.
Is that accurate? Am I accurate? Thank you.
That was an affirmative from our president, Sue Fitzsimons, if you couldn't see her head nodding. Thank you.
Very good, John. That's our goal of everything, you know, is bring the value to the owner members. Keep this, you know, I think that reflects in home values and the quick pace of the home sales and stuff like that, in my opinion, so.
And anyone who's listening, and maybe you're not back in Sun City West after being gone for the summer, be sure and stop in and see Lizard Acres. It's becoming quite a great gathering spot, and we're very fortunate to have it.
Thank you, I agree. Ann.
Okay, Pete's now going to give us an update on the capital and reserve fund, if there are no other
So
questions.
capital is a key component of the reserve funds and the association in this BNF committee. So I feel incumbent to give updates regularly. The governing board, of course, permits at the May 24th or so regular session of the governing board approved 5.7 million approximate capital spend for the current year. Anybody that wants to get the detail can reference our budget. It's posted out on the website. We've issued quite a few POs already, the large dollar ones for some parking lots through Carl, and big dollars for our annual golf maintenance spend and things like that. But 3.2 million issued. 2.9 of that is on the current year, and a small amount on the encumbered items that I talked about earlier. It's probably hard to read the $5,000, but closed POs, basically, we don't get a lot of these because you only have a 31-day window from July 1 to having it completely installed, paid for, and everything. But we did have some, and so $70,000 of POs have been closed, and at this juncture, we do have $5,000 or so savings. So it's a good start. The capital items, this will shrink as time goes on, but these are items that we have not issued any POs to date. Again, by the time you get every month, items will be knocked off of this. This is just the items that have not been initiated. One of those is actually inaccurate now because in the last week, the biggest one up there, the Grandview irrigation, which covered the main lines, the pump station replacement, and the design work, we have actually executed a contract with a design company. What is the elephant in the room on that is what's going to happen with ADWR in terms of water rights or water usage. Will it be mandated to be hyper restrictive to like 90 acres, or are we going to have some ability to have a little bit less than that? But we need to get that moving so that we can have the main line work and start the process of a possible irrigation replacement in the upcoming years. Allowances, this is, for those that are new, this is essentially the 7 categories on here typically covers all unexpected ones so that the governing board doesn't have to reconvene every time there's something that a capital item that wasn't expected. We're off to a good start. This is actually through August. So 395 was allocated in the categories you see there, and just a nominal amount of spend has been issued so far.
Pete, I just have a question. On these allowances in the operating budget, do you have a repair and maintenance line? And then in addition to this?
Yes and yes. These are capital criteria. So if they meet the 5-year and 5,000 threshold, then they would be allocated here. Otherwise, everything else hits the repair and maintenance operating line.
Okay, thank you.
And then this is kind of a busy slide, but it's probably the most critical of all. Some of the numbers you saw in Jean's filing. At the very top of the highlighted column, as we enter into the fiscal year 21-22 year, we had $28.8 million in reserve funds. Our expectation is for about a $1.5 million operating cash flow. So far, you saw we were $500,000 ahead, but we do have headwinds of the seed, and minimum wage looks like it's going to be pretty hefty. Health insurance looks like it's going to be pretty hefty. So I'm not banking that until, we're at the end of the year. The investment earnings is about a 1.5 yield, 1.5% yield. So we're achieving that at about a 1.7 clip right now. So we should be good by the end of the year. And the APFs represents 70% of the overall cash inflows. So it's very critical to watch, how those home sales and deed transfers happen. As we mentioned, July, and while I'm not reporting August, August was another solid month. So that's holding up very well. We did put a $200 increase so as to generate about $250,000 more, jumping back up to the operating cash flow. We did not impose any increases on dues, golf rounds, bowling fees. It was limited, I think, to just $1 or $2 more on cart rentals. And that was essentially maybe a small increase, in the guest fees to get us consistent with other communities around us. The encumbrance annual fund, basically, that's 2 numbers. It's $1.5 million that represents the encumbrance, that essentially what I was talking about earlier from last year's spend, that we need to make sure we have money allotted for that. And then the offset is the $1.9 million that's going to flow in there once we make the fund transfer. And then the 5.7 bolded at the 4th line from the bottom should look familiar. That was on my slide earlier. So if all things, stay within the realm of that, we should be having about a $29.8 million balance at year-end next year, which against the fully funded expectation of $53 million will get us in the mid-50s range, which is pretty solid, and also some push out into future years keeps us well above the 40% floor. I remind everybody that we do put encumbered allowances up at the top of the cash outflows is new capital and also allowances. Those are for new capital, and so we do put some expectation out there for, that the governing board may have new needs that are not part of the R&R. So.
See on that where those allowances are, the capital expenditure allowances, the 395,000.
Right.
Yeah.
So, we'll continue to give updates on this as we enter into the budget period. Some of those expectations, you can't really see it, but dues increases, and expense impacts off inflation are really high-profile items that we want to keep our eye on. The home sales is, that 1,200 is a modestly conservative, but 2 years ago, we did not hit that, so it's not, a given. And then I just put a modest increase on APFs in the assumption. So it's a long, slow-moving item, but it's really critical that we keep our eye on that, as Gene alluded to.
Thank you, Pete, and I do point out that the large irrigation expenses that we may see in, or outlay in fiscal year 23 and fiscal year 25 are still contingent on the Arizona Department of Water Resources and what comes from them. We have these monies set aside right now. They may or may not be necessary, but we don't know.
Perfectly put, yeah.
Do I have any questions or comments from my committee members? Kathy?
None.
John?
None.
George?
None.
Gary?
No, thank you.
Anita?
No, thank you.
And anyone in the audience? Okay, thank you, Pete. I appreciate that very much. The next item on our agenda is the revised RR&Ps review. If any of you were able to listen in on either of the Charter Club meetings in August, you'll know that there has been extremely involved discussion on all of these, many of them related to the tax status issues. I have brought these to our committee today because there are some things that pertain to the Budget and Finance Committee that we need to address. We have removed from the RR&Ps, in fact, if you go to the last couple of pages.
Madam Chairman, may I interrupt you just for a
Yes.
moment? Going back to the item of the review of the May, June, and July,
Yes.
do we have consensus to move that for approval to the governing board?
Thank you so much, Past President George, for catching my lack of,
No,
no, but I'm
we got a
saying
lot of
it.
numbers.
I'm saying it. I asked for my committee to give consensus, first of all, to move forward the May financials to the governing board.
Yes.
Yes.
Everyone, okay. Now I ask for consensus to move forward the June 2021 financials.
Yes.
Yes.
Anita and Gary, speak,
Yes.
speak up, okay? And also for the July 21 financials, do I have consensus on that too?
Yes.
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 Thank you so much, and thank you, George. You're going to be a valuable member of this committee, keeping me on my toes. Going back to the RR&Ps, the main items in the RR&Ps that are going to pertain to the Budget and Finance Committee are on pages 43, 44, 45, and 46, which are about sales policy and village store. And the village store is no longer in existence. Pora will be opening a gallery, and it will act as a consignment shop for artisans in Sun City West. But with this, I'll back up just a little bit. These revised RR&Ps will be going to the governing board on Thursday at our regular meeting. And these items that are being redlined concerning sales policies and the village store would then, if those are approved by the governing board, would come out of the RR&Ps. So I'm asking, we can review the entire document, although unless someone has some specific areas they want to go over, we won't do this page by page, but we're going to specifically focus on what pertains to the village store. So I'm going to just go around and start with questions that people may have. George, I'll start with you.
I've been through the meetings on this for a number of times. I really don't have any questions, but when it comes to the removal of this, I'm very much in favor of it.
John?
I've also been following this via the YouTube presentations. I have no questions, and I agree with George. We need to just delete it.
And we do not have to focus just on this last chapter, which is called Chapter 5 currently in the RR&Ps. If you have questions on anything else that's in there, we can address those. But this is what's mainly pertaining to the Finance Committee. Kathy, do you have anything?
No, I don't have any questions that couldn't hold till later. I'm fine.
Okay. Gary?
I don't have any on the last part of this, but I have a couple other items within the document that I wanted to bring up.
Well, let's just go ahead and address those, Gary, if you want to refer us to the page.
Sure. As long as Donna's in the audience, I want to congratulate her on her tolerance from the workshop. She had a tremendous exhibition of fairness and firmness at the same time, and that's unusual in these days, but a grueling conversation to go through, but she handled it well and come up with a document that I think we can be proud of. Page 15, just a question. We talk about the membership participation rate of 75%. I think we said that the social clubs were 75% and the craft clubs were 50%. Would it make sense to put the 50% for the craft clubs in there, or are you going with everybody at 75%?
Donna, I'll let you, I'm going to ask Donna Maloney to address that. If you want to come up to a microphone here on the end.
Thank you, Gary. Specifically where you are addressing, this has to do with participation. This has nothing to do with membership, which
Okay, I'm gotcha, sorry.
No problem.
Okay, you may want to stand there for the next one.
Okay.
On page 31.
Got it.
The tax status section.
Yes.
Charter clubs may apply and qualify for any 501c. Probably better served saying 501c tax exempt status. Nonprofit, as you know, the tax exempt, or all the 501s are tax exempt from federal income tax. Nonprofit and not-for-profit tags are statewide. So a tax exempt would apply to the 501c, whatever they want to go to 3 or 5, 4 or whatever it was.
Okay, so for me to confirm, what you would like is for it to say charter clubs may apply and qualify for any 501c tax exempt status and eliminate nonprofit.
Yes.
I have noted that. Thank you.
I'm trying to follow this tax status under the note. It read, is that where we were making that correction?
Correct.
Okay. I'm just taking the minutes.
Anything else?
Just a thought, not a big deal if you didn't want to do it, where you referenced the www.irs.gov, the specific item within that would be helpful to people doing research on something else would be publication 557. And if you wanted to add that, it would just put them in the right place without having to jump through a lot of hoops on their website.
Okay, so to confirm again, you would like for it to say refer to www.irs.gov.publication 55.
I'm not sure if it would be a /publication 557 or what the exact reference would be, but that's the document within the IRS site that they want to look at if they're looking to do something different.
Thank you. I will see if that works. Thank you. Anything
You're
else?
very welcome.
Anything else?
Again, I just, one other thought on the workshop conversation. There was so much interest around the C3, C4 conversation at the very end of the conversation that was taking place from guests. And the tone, I thought, after looking at it online, almost seemed to give people a hope that there was something uniquely positive about changing from a 7 to a 3 or a 4. That was the takeaway that I had. And I think everybody in the room has dealt with this long enough to know that of the 103 charter clubs we have, there's only 5 or 6 that would benefit to any degree from changing to a 3 or a 4, and they'd have a lot of work to be able to have that happen. But the vast majority of clubs, over 90%, should stay exactly where they are as C7s because what they do fits that definition perfectly. Just a thought on the conversation after the fact.
Thank you. Do you have any other comments, Gary, on these?
No, I'm good, thanks.
Okay, Anita?
I agree completely with Gary about the 501c3. There are a lot of hoops that organizations would need to jump through, as well as additional filing requirements and so on and so forth. If you go out to the irs.gov website, there is a search box. Just type in 557, it'll pop up the publication.
Thank you so much for that. And do you have any comments about this elimination of Chapter 5 on the sales policies in village store?
No, I don't. The only thing I do have a concern with, and it's just, I think maybe from the reading, is on page 1, where it says, furthermore, club members may not use the facilities for any personal financial gain. That, to me, if reading it literally, I would have some concerns from a standpoint of the craft clubs, where people are in there making stuff. Are they going to, and they may want to end up selling it in the village store, or not the village store, but at Cora now. Are they going to be deemed as non-compliance?
Donna?
I guess there's a lot of pause there, right there.
Well, Donna's coming up to the podium.
Sorry, I
Thank
was
you.
getting to the mic. And I would just like to say that this specific area will be up for discussion at the workshop on Thursday. There has been a lot of feedback regarding the concern on this issue. And so we will be making a totally different recommendation for this area.
Thank you, Vice President. That really is not my biggest concern. We want to make sure if we are going to be following the letter of the law, we don't want anything ambiguous.
Correct.
Anita, I might add that some changes came forth late Sunday to these, but we could not address them today because we did not have the 48-hour time window to put them out here on the board docs for our committee to consider. So, and that was one of them. Is that correct, Donna? Yes, Donna's nodding her head yes. So thank you for mentioning that, Anita.
Thank you.
And that's why, in case anybody's wondering why the board will be looking at something different, it's just because of the policies that we have to follow with the Sunshine Law. So what I'm looking for now from our committee.
Ann?
Yeah, oh, yes,
Yeah,
Kathy.
Sorry, I
Thank
just
you.
have
No.
one editorial, and that's on page 5, under gross receipts.
Okay.
We're using the term gross to define gross, so I think I would say are defined as the revenues received by the organization and cross out gross. I mean, if you're trying to define gross receipts, why would
That's-
you use the term gross?
That's a
That's
good
like
point.
English 101.
Yes, it is, but
Okay.
I had not seen that.
Okay.
So the gross receipts are defined as the revenue received by the organization?
Revenues,
Revenues.
yeah.
Donna?
I have it.
You've so noted that, okay. And good catch, Kathy. I'll tell you, I love all these wordsmiths and these smart
Yeah.
people that we have who catch these things.
And then I just have another question.
Sure.
Several times throughout the documents, there are notes. So for example, some, well, you can see the different notes. It felt to me that sometimes, because notes are really not enforceable, and I'm wondering if a review should be made perhaps in the future of whether these should become policy. These are likely interpretations, but I felt some of them bordered on policy, and that might be a discussion for the future.
Okay, and Donna can duly note that, and that would go to the charter clubs then. Okay, any other comments about the RR&Ps? If not, I'd like consensus to take the B&F's approval of what's been presented today with some minor changes noted to the governing board on Thursday. So Kathy?
I support.
John?
Yes.
George?
Please.
He's begging. Anita?
Yes.
Gary?
Yes.
Okay, thank you very much. We have consensus on that. Now, that was a preliminary to the next item on our agenda, which is the revision of policy FI 14. This is a very short policy. It pertains to the village stores, or the village store, but with the acceptance of the RR&Ps, it would make sense to eliminate this policy because we no longer have the village store. So we are bringing this forth as a red line. It would be eliminated, and that would make a clean bill of our financial policies. So I'd like to open this up for discussion. George?
I think the retirement is policy is in order since that the village store does not fall under the auspice of the recreation centers anymore.
Thank you. John?
I agree with George.
Kathy?
I agree.
Gary?
Eliminated.
Anita?
Do we need an effective date in this?
I didn't understand you.
I said, do we need an effective date in this?
The acceptance date on this would,
The effective date, not acceptance, the effective date.
the effective date of this would be the date that our committee, or that the governing board accepts it, which if they would approve it on Thursday, that would be the day that it was effective.
Okay, but my question is, does that need to actually be in writing in this red line copy? That it was effective on such a date, this policy basically is no longer in existence.
Well, the policy will be removed from BoardDocs.
Okay.
And so, as you know, on our policies, we do have a date that they're enacted, we have a date that they're revised or reviewed, that type of thing. But this one will actually just be eliminated. So then FI 14 will be an open item under the financial policies. It would be available for us to use for something else, that same number if we so wanted in the future.
Okay, thank you.
Madam Chairman?
Yes.
Anita, it will be, even though it's eliminated, there is a retirement clause that's in there, and it'll say that it has been retired by such and such a date, and that's part of our correspondence that goes along with it.
Thank you, that's exactly what I was looking for. Thank you, George.
No
Thank
problem.
you. Thank you, George. I'm glad you know this stuff. Okay, so do I have consensus then to move the elimination of FI 14 forward to the governing board?
Yes.
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 Okay, that will move forward by consensus. Next item is just a couple of, not really housekeeping things, but I did want to review policy C03. This concerns the standing committees of the governing board, and it lays out in detail what we are to do this year. And I just want to make everyone in the committee and anyone who might be listening aware of what we do. We review all aspects of the financial policies and financial plans of the association, make recommendations to the governing board and the general manager. We provide recommendations to the governing board regarding the general manager's proposed annual financial plan for the ensuing year, otherwise known as the budget, the 5-year financial forecast, capital equipment, and projects by December 1 of each year, and the association's insurance requirements and policies. This does not mean that we have a budget by the 1st of December. It's that we have a plan for the budget by the 1st of December, in case anybody wonders about that date. Prior to the first day of January each year, we recommend for governing board approval a reputable certified public accounting firm to conduct the annual financial audit. As I mentioned earlier, last year we approved a 3-year agreement with Clifton, Larsen, Allen CPAs. So this will be just, as I said earlier, that's taken to the board this week, but that is already in place. I would think that next year, this committee would start looking at if they want to do an RFP and review going forward after that to either continue with that firm or take another firm, but that's future business. And finally, we shall oversee and report the performance and balances of investment association reserve funds on a quarterly basis to the board, recommend policy changes regarding the investment of reserve funds as necessary. We will have a report. Are we going to have that at the October 5th meeting?
Thank you. For those that don't know, several things have happened since you last convened. The RFP that John was part of, and Lou and Terry allowed for an RFQ to go out, and out of 8 or so, we narrowed it down, and eventually this committee approved the movement to investment advisor of Cap Trust. That contract's been executed. The fund transfers occurred in early September from Vanguard to Pershing, which is also under the Bank of New York Mellon. And also the CD that was held with JP Morgan was also transferred into Pershing. So we have confirmation of all those activity to the point of introducing them and hearing Cap Trust firsthand. Initially was targeting October 5th, but death in the family of one of the principals within Cap Trust, he asked at the 19th, so with your blessing, as far as an agenda item, I would like to have them, it also gives them a full month of performance, a full month of preparing, and I would see that advancing at that date.
Okay. If you didn't understand what Pete was saying, on October 19th, we will have an in-person presentation from Frank Piles with Cap Trust, who are our new financial advisors. Are we going to be getting a final update or anything from Vanguard?
No. They do exist. That's a good point, and I shouldn't say no. I'd be glad to present
I think we
quarterly,
need to
yeah.
have that quarterly performance because
yeah.
they have done the last, and that is
Yeah.
in our guidelines
Mandates,
of
yeah,
what we are to
fair
do.
enough.
So if we could do that
I will.
at the October 5th meeting, if you could just present that,
Sure, I
can't
will.
you? Okay. One of the other things we do annually is review our financial policies. I went through our policies, looking at what we had done last year. We reviewed a lot of them. We made some major changes, and it was good. We did a lot of work last year, and I'm very proud of the committee. What I would like to do is just start out at the next meeting, and I know John's going to be gone and Kathy's going to be gone some too, but I would like for us to review policies FI 01, 02, and 03. So if each of you could just look at those and send me any recommendations you would have for any changes. We don't have to have changes, but we do want to review them. So if there's anything you see that might need to be changed or that we might want to discuss, if you'll let me know prior to our meeting. I'd like to get that information by, I don't have, let's say the 30th of, or the 29th of September, so that I can get those, any changes made, and we can get all those published prior to our meeting. So that'll be FI 1, 2, and 3. And I don't think any of those are real lengthy, so just get those to me, please, by the 29th of September. Any questions or comments from my committee members on any of the policies? Anything you already know that we're going to need to address, or I didn't exactly expect you to come prepared to do that, but I'm just asking up front. I will note that one policy that just seems to be a perennial favorite. We have what's that? FI 17, that is correct. George wins the prize for that one on the asset preservation fee. That is very much a work in process. And we're continually learning, and we're trying to do things that will make this better for our community and make it fair to all our owner members. Can't always do everything exactly the way everyone wants done, but we try to do the best that we can. Deb Long, who is in charge of that program, has had an extended time off this summer. She is back as of yesterday, and I have asked her to bring us a report at our meeting. I believe it's on the 19th of October. She will give us an update on where we are with the REDS program and all the APFs. So she'll have an update for where we are with all of those. And she is the one who usually drives any changes that we need to make in FI 17, but we'll address that when we get to it. Any other questions on this about our CO3 or the policy review? Last item on the agenda is just a goal-setting discussion. As I looked at this, it seemed like the items we addressed in new business item 4.06, the charge that is given to our committee through the policies and also the policy review, really encompasses what our goals should be this year. But I ask each of you on the committee, if you have other goals, other things that you feel we need to address, please let me know. And conversely, if anyone in our community feels like there's something that Budget and Finance needs to address, please contact me and let me know, and we will take it under advisement. Yes.
I do have a couple issues, but I want to go back and just thoughtfully write that up for some areas that we might focus in on next year, but I'll get that to you.
Good. I appreciate that, Kathy. I'm going to go ahead then now and ask for committee comments. So, Anita, I'll start with you. I think you're the farthest away.
No, I have no comments. It was a very nice meeting today, Chairman.
Thank you, Anita. Gary, do you have comments?
Just as very well organized, and all the participants came well prepared to inform us. I appreciate the conservation of time.
Thank you. Kathy?
No, I don't have any comments.
Thank you. John?
No comment.
George?
Just a couple quick ones. Thank you. Great meeting. Look forward to Anita and Gary joining us in person. And I just wanted to say thank you to Sue Fitzsimons for her vision for the Lizard Acres Pub, and to Donna for the tremendous work with the RR&Ps that haven't been looked at for many, many years. Thank you.
Do we have any comments from our live audience at the moment? The ones who are sitting here in the lecture hall. Katie, do we have any comments from remote?
Just a thank you to the committee for all your work from someone online.
We appreciate that. Our next meeting date is the 6th of October. That will be on a Tuesday, be 9 o'clock here. And if there are no further business or anything to come before the committee, we are adjourned. Thank you.